I'm Judy Shaw for NYSE Floor Talk. Joining me today is Matthew Schreiber. Matthew is the Co-Chief Executive Officer at WBI. Matthew, thanks so much for joining me.
Thanks for having me.
Now, before we get started, I need to just say our little disclaimer here. I want to remind everyone that the NYSE doesn't make any recommendations or provide investment advice, and we're not endorsing or recommending Matt or WBI either. This interview is for informational purposes only. Okay, so Matt, got that out of the way. Let's talk.
All right.
Let's talk about WBI. WBI is in New Jersey. How are you doing with the current coronavirus pandemic, and how has your transition to working remote been?
Yeah, luckily we're pretty early to make the decision to go remote. A lot of what we do on a day-to-day basis as an asset manager is very technology driven. So it was pretty easy. It was just getting people from the office, back home connected. It took a day or two to get everybody comfortable with working from home and that they could do their day-to-day tasks, but it was pretty easy. The bigger challenge really for us was trying to get salespeople working with Skype or Zoom, and then having to try and speak to financial advisors who on a day-to-day basis don't use Zoom or these other things. And in fact, a lot of firms don't like that they're taking up so much bandwidth with video conferencing. So, that's been the tougher thing, is getting our guys and gals looking good on Zoom, know how to work Zoom, help the advisor work Zoom, and so they can actually do that with their clients as well. So it's been a process, but good.
Mm-hmm. Great. Yes, that's definitely been a challenge for a lot of us. Let's talk about your side technology. It's technology that's used by WBI. How does it work in the current work and market environment?
Yeah, it works pretty darn well in the current environment because it is an advisor-assisted robo. It's not quite robo where you're taking the robo, to a client directly and advertising. It's got the advisor-assisted component. It screens from an investment perspective 30,000 mutual funds and ETFs and tries to very quickly, with the advisor's assistance with the client, build the client's profile, identify their benchmarks for loss. What's the level of loss that they're comfortable with, trying to achieve a higher rate of return? What's the return that they do need, their required rate of return? Then optimize the portfolio to those needs. It's an electronic account opening, e-signature. So it works great in this environment. It's a matter of just, again, trying to help advisors become more accustomed to utilizing Zoom and technology in general. And it's been pretty fun and rewarding the last few weeks, helping advisors, combat a challenging situation for their businesses too.
Okay, Matt, finally, tell me, what does WBI see happening in the markets over the coming months?
Wow, so it's we think that it's going to be lumpy. So a lot of folks are expecting maybe a V-shaped recovery. We're thinking it's going to be more of a W. So while we hit a low a few weeks back, we do expect maybe the markets to continue to melt up this earnings season, but really it'll be met with an inflection point a quarter or two down the road, because after all, companies maybe had a bad month, this quarter. What happens next quarter when the whole quarter was really bad for them? So I think that could be an inflection point for the markets. However, obviously with the Fed, with the federal government, and maybe even a possible infrastructure spend, this could set us up for, a better cycle for markets long term. Over the last 20 years, the average annual rate of return on markets has only been in the 5 to 6% range, which is a kind of a classic underperformance period. So And what we were lacking over the last decade, and we had slower economic growth as a result, was kind of that infrastructure spend. We actually might get that here. Obviously, we have an election coming up, so we may not get it soon. But the follow-on with accommodative monetary policy, the packages that the federal government's already put out there, and maybe an infrastructure spend, help us really to get into maybe a long-term growth cycle that's a little bit better, and maybe even a little bit better for markets year in and year out. Not still have some challenging, spots like you always do, but maybe a little bit more towards that 10% per year over a long time frame, which would be great.
Okay, well, Matt, thanks for joining me on NYSE Floor Talk. It was great to talk with you.
Thank you very much for having me.